Hi guys, it's Thomas here from COTBase.com. Welcome to our weekly COT review. Today we're going to be analyzing the fourth Commitments of Traders report of 2023, and as we always do, we shall start off by looking at the largest changes in commercials positions. Before we jump to the review, just a brief reminder for those who are new to COT analysis. Here at COTBase.com, we offer a lot of educational material, not only in written format, but we have some very useful videos as well. These videos will guide you through the analysis process step by step, showing you what kind of tools there are to analyze this wonderful data. So back to the review, and starting off with our first market, which will be soybean oil. We are analyzing the classic COT report type. We're looking at futures and options data type, and we are analyzing net positions. There's a lot to do here in the settings tab. So soybean oil is our first market, 27% change in commercials net positions. We are measuring this change size compared to the past 52 weeks time range. And you can see the magnitude over here on the red line representing commercials net positions. It's definitely greater than average, let's say top 5, top 10. And it is a bullish COT change signal coming after a decline that's been going on. So it is actually a very good combination. I like a COT change signal coming after a trend that's been going on and the signal being in the opposite direction. So there we have that. And if we move on to the 5 years chart, you can see that not only do we have a bullish COT change signal, but we can actually witness an extreme building up towards the bullish side of the market. If you look at this 5 years chart, you can see that we could definitely reach much greater levels. Nevertheless, if you're looking at the past 2.5, 3 years, then it's definitely, if you're looking at that range, it's leaning towards the bullish side of the market. The next market is going to be crude oil, the Brent crude oil to be specific. Here we have a 25% change in commercials net positions. You can see the magnitude over there. Again, bullish COT change signal. However, this is correlating with the trend. So we have a rally going on and a bullish COT change signal. It simply suggests that this could continue on in the next short couple of days. But if we look to the 5 years chart, you can see that there's no stress signal suggesting that we should witness any change in that. So not much to conclude from stress analysis. Soybeans complex, something for our subscribers. We combine different markets in one category and make a unique combined COT data for them. The next market is gasoline. Here we have a 19% change in commercials net positions. On the 1 year chart, it becomes more visible, a bit larger than average, but nothing too unusual. Honestly, I wouldn't spend too much time on that. So let's move on to the 5 years chart. Here we have, again, a situation where we cannot really identify a huge stress in the market. So yeah, it's just one of those weeks. You don't always get huge flashy signals. But hey, for those who are staying to the end of the video, as I always do lately, I will show you something quite interesting. Our intraday COT tool. And actually, we're going to look at the Euro-US dollar currency pair and on a Renko chart. But before we do that, let's go ahead and examine and analyze large speculators COT Extreme. We've got the Euro-British pound currency pair on top of our list with a 333 report extreme. Now, I should point out this is a market where we have a shorter COT history. I would not put too much emphasis on this. You can definitely see on this 5 years chart that this is still more of a bullish extreme. However, I would rather look at the euro market, analyze that separately than the British pound, and see which one I find stronger or weaker. That would be a better option. Lean hogs. Here we have a 241 report extreme. It is an unquestionable bullish extreme. You can see that we are actually witnessing a bit of a rise. However, this is probably due to the rollover in contracts. You should look back in time and see when commercials reach net long territory, which happened the last time in 2019. You can see what happened to the market. So it is a bullish extreme, no question about that, and we can see already the price moving in that direction. The next market for the classic review part of this video is wheat. Here we have a bullish extreme that is widening as the market is headed lower and lower. It's simply showing us that stress levels and traders' positions are building up, suggesting a medium to long-term shift in the trend. As I have promised to you, we're going to look at the Euro-US dollar currency pair. This is TradingView. We have the indicator, the iCOT intraday indicator on the market. This is a daily candlestick, a Renko chart. And you can see how well we are catching tops and bottoms in this market. Fabulous signal, really something very good in combination with classic COT analysis. For those who would like to know more about our indicators, come visit us here at cotbase.com/indicators. You will find the iCOT intraday indicator and our newest one, the iCOT intraday indicator with AfterSignal. That's what you have seen, the AfterSignal basically filtering out signals as the market is headed higher or lower and lets you know when to enter or exit the market. By the way, we had a wonderful webinar last week. You can find the video amongst our videos on our YouTube channel. We go into thoroughly examining this indicator. And if you have any questions, always feel free to comment underneath the video or send us an email to info@cotbase.com. All the best to you. Hope to see you in my next COT review. Take care and goodbye.